This video is going to answer a couple of the common questions that we receive from people who are interested in having a machinery and equipment appraisal done. So, why is my banker asking for an equipment appraisal for the business I'm going to buy? Why do I need a certified appraisal? And do you need to come and visit the equipment? We are Advantage Liquidity Partners Limited. We are members of the NEBB Appraisal Institute, which covers machinery and equipment appraisal. As such, we hold the CMEA designation, which stands for Certified Machinery and Equipment Appraiser, and we're bound by a strict code of ethics put together by the Institute. We serve customers throughout the Maritimes and Eastern Canada from our Moncton, New Brunswick location, and we do business evaluations globally. So let's take a look at these questions. So the first one, why is my banker asking for an equipment appraisal of the assets within the business that I'm buying? So this is a great question. Um, Here is an example of a very simple business being purchased for $100,000. And in this business, there could be some inventory, some equipment, and the balance. The reason why the buyer wants to buy this business is because of all the customers that do regular trade with the company. But how do you cover the gap between the tangible assets within the business and the purchase price that was agreed to of $100,000? That gap is called goodwill. So in this instance, the buyer is purchasing inventory of 25,000, equipment of 25,000, and goodwill of 50,000 for a total of $100,000. Now, equipment and inventory can be financed through a bank, but goodwill is much more difficult to finance. So there have been many cases throughout the past where a buyer and seller might collude to change the story when it comes time for the buyer to talk with the bank. What they might say to the banker is that there's inventory of 25,000, but the equipment is worth 60,000 and the goodwill is only 15,000, with the idea being that they're going to get a larger loan provided from the bank by representing the equipment as being worth more money. As you might imagine, uh, banks want to know the value of the collateral that they might be taking in order to provide a loan. And so in this instance, if a bank lent $50,000 against the purported $60,000 of equipment value, and then something went wrong and they had to seize that equipment and liquidate that collateral, they would only realize $25,000 if they were able to sell it for its fair market value. And so in this instance, the loan would be under collateralized. And so this is the number one driving reason why banks are asking for appraisals of equipment when they make a loan for someone who's trying to buy a business, is they want to make sure that they actually have the collateral protection in the assets of the business. And there's no one at the bank who's an expert in going to value this equipment. And that's why they require a report from a impartial third-party certified machinery and equipment appraiser when you may be trying to buy a business. Why is it that a certified appraisal is being asked for? Well, it's about managing liability, both your liability and the liability of the banker. They want to make sure that this report is going to be defensible and that if the file is ever examined in the future, that they can demonstrate that they hired an expert who was able to go out and make an objective opinion of value. If the bank is using the Canada Small Business Finance Act program administered by Industry Canada, then the program is going to require a certified appraisal of any machinery and equipment used as collateral in that program. There's also an opportunity for some companies to change to international accounting standards, and this can allow them to put greater equity value onto the balance sheet. And in order to do that, they need regular certified appraisals that they can use to demonstrate that they've done a validation or a test of the actual machinery and equipment value. Sometimes for tax reasons, people can transfer assets between companies or people, and an appraisal is a way to defend themselves against any future examination from the tax authorities that perhaps they had done a transaction at an incorrect value. And so it's basically a way to protect the transaction or the transfer to make sure that their actions are defensible because they can demonstrate the values that they used in the transaction were defensible. There's legal purposes for wanting to determine the value of assets. Sometimes there are disputes between people or companies, and we've certainly been asked to do reports in the case of a marital breakdown or divorce case where perhaps there's business assets that were jointly owned that needed to be divided up in in that case. And of course, you want something that's going to be defensible in court. So we've actually had our reports appear as evidence in court and have had appraisers go and speak with the court and act as a witness to testify as to the value of equipment that was within a business. Do you need to come and visit the equipment? Well, the answer to this is not always. We can do a version of a machinery and equipment appraisal called a desktop appraisal. And the fact that we didn't actually go see the equipment is noted in the report. So it would be known by any reader of the report that we did not actually go and visit the equipment. The report is considered to be more authoritative if we do go and visit, and many lenders require this, especially what I might call out of town lenders. So, for example, if you are acquiring equipment as part of a business transaction and the lender is in another city, in Toronto, for example, or if you're selling equipment you own to a leasing company and doing a leaseback deal, then there's no person from that entity who is local to the area. These types of lenders in particular want to make sure that someone goes out and actually sees the equipment to validate that it really exists and that it is where it's supposed to be. There can also be a mixture. So, for example, we can have equipment that is largely located in an accessible location. For example, we've done reports before where we've visited many locations. For example, a business location in Fredericton, St. John, Charlottetown, and Halifax. But the business might also have had several pieces of equipment up in Labrador. And where we went and visited all the locations in the Maritimes, we may have included the Labrador equipment as a desktop appraisal just for those pieces to avoid the cost of travel up there. And especially in an instance where, you know, the far off pieces are quite small in number compared with the pieces we can see, there are many lenders who will accept this kind of mixture because they understand the cost prohibitive nature maybe of including a trip to Labrador in doing the report. And so for more information or to reach out and contact us and talk with us about an estimate of what it would cost to have an appraisal done, please reach out to us online at BusinessAndAssetValues.com. Under the Contact Us tab, you'll be able to find our contact information, email, phone number, etc., and we'll be more than happy to speak with you about your project.